All right, ladies and gentlemen, hello. My name is Darius Chauskas, and I'm the Chief Market Analyst here at Markets.com. And I just wanted to quickly run through three top U.S. indices. So Dow, the S&P, and the Nasdaq, and tell you basically I wanted to have a look what's happening right now. What's the technical picture? I believe if you are trading, of course, these instruments, you have noticed that we are at very interesting spots again. Look, first of all, I'll start off with the Dow Jones Industrial Average here. I'm looking at the cash index. And after Friday's nice jump here to the upside, after we cleared some key areas of resistance, after we created a new all time high on the Dow, we quickly drifted back down. And to me, whenever I see something like a quick rally here, and then let's say a clearance of the current all-time high, and then we actually at the end of the day we drift back down and stay below that all-time high. Now that's where the interesting bit comes in, because then it seems like we're kind of ready for a little bit of a retracement back down. For example, you can see that this is what happened recently back in at the end of July. We went for a new all-time high on that day, and then it quickly reversed back down, and the day finished in the kind of negative, not only negative territory, but also below the previous all-time high at that moment previous. So the same story happened on Friday. We rallied, we cleared the current at that moment all-time high, and then we kind of at the end of the day we ended the day in the red, and especially like I said below that previous all-time high. So this kind of led to a bit of a retracement back down. I'm not saying like full-blown sell-off or something like that. No, no, no. But we're just, like I said, we're considering a possible retracement back down. So I'll say it this way: as long as we stay below this 45,000 kind of zone, for 45,100 area here on the cash index, if we stay below that, I will continue targeting the downside. Let's not forget that we are still trading above this little short-term tentative, of course, upside support line taken from the low of the or the lowest point of April. But look, it's a very tentative line. I mean, it's just like you might focus on it, you might not focus on it, and it's up to you. But I just want to have some sort of like point of reference here. And yeah, then if we do clear this upside line, then of course it kind of opens the door to a possible move lower. That said, I would prefer to wait for a drop below the 50-day EMA in order to start getting a little bit more comfortable with, let's say, a more of a prolonged move to the downside. At the moment, any throwback here could be up until this upside line could be classed as a temporary correction for another possible leg of buying. But that is, of course, if we will see something like this, like a correction back down here. Maybe we won't. Maybe we'll just pop once again above the 45,000 mark and stay above it. And this is where we could then start considering maybe 45,000 and a half or something like that. But yeah, that's in terms of the Dow Jones Industrial Average, because, like I said, look at this. We are at a very important key area of resistance. I don't have like a level, specific level here. I'm more focused on the area. And if we somehow clear that and continue to trade above it, then yes, higher levels could be met. Now, in terms of the S&P 500, now the situation here is a little bit different, but also interesting. Yes, we went also for a new all-time high. The same story happened with the kind of the clearance of the all-time high and then kind of drifting back below it. But here I'm also watching this on my chart here. I'm watching the 6,435 zone right here. It seems to be acting as a good area of support. Previously, it was a good area of resistance. Now it could be seen as a good area of support. If we do drop and stay below it, I will consider a bit of a move to the downside here. Ideally, I would prefer to see a move towards the 50-day EMA, but from what I see here on the S&P, the 50-day EMA is not really kind of respected that much. I think that I think we need, for this specific instrument, 50-day EMA is not the one to watch. Maybe it could be the 40-day EMA. Let me just double check here. 40, no. Also, no. So maybe it could be the 30-day. Again, like I said, you play around with these, and okay, something tells me yes, it's a little bit better than the 50. However, let's put it this way. I'll bring the 50 back because I kind of use it more often. It carries more significance for me. But of course, you be the judge. You do whatever you're comfortable with. But yeah, on the S&P 500, I'm watching this 6,435. Of course, we're all watching the Jackson Hole symposium, which is going to happen. Well, kick off on Thursday. But yeah, we are waiting for Jerome Powell's speech on Friday. So this is when the action could happen, and we could see some, some nice movement in there. So for now, I am watching this one carefully. Of course, Nasdaq is also an interesting one. I talked about this in my morning webinar, but yeah, it started falling now below the 23,700 zone, so it's in a way a bit of a bearish indication. That said, this if we take only this formation here, then maybe somebody might say that hey, we could be forming something of a bullish flag here. This is a pole and this is the little correction we're seeing. So again, it's too early to say that, but I think even if it is a bullish flag, either way for me, I would like to see a push about the 23,968 zone here, which is on my chart the current all-time high. But of course, we're all watching that psychological 24,000 zone. So let's keep an eye on that one. And if we do clear it and we do stay above that 24,000 zone, then yes, I will go further north. For now, I'm just carefully, cautiously approaching this. I do like Dow and the S&P. I do like Dow and the S&P. A little bit more towards the downside. However, looking at Nasdaq, well, it's kind of giving me a slightly different picture. So that's why I need to be a little bit more careful, with this, not to be way too categorical. So, ladies and gentlemen, like I said, let me know in the comments what you think. As always, thank you very much for watching and listening. As always, stay safe, have your stop losses in place, risk only what you can afford to lose, don't overtrade, and everything will be fine. I'll see you later in my next video update. Bye for now.